Hello again. Moving forward, we're going to take a look now at the commodity channel index, still in the chapter with trending indicators. And the commodity channel index actually has been made famous by a guy named Woody, or nickname Woody, like the Woody Woodpecker. Just Google and you see what I mean. And why was this? Well, because this guy invented or found something on this commodity channel index, a trading strategy that seems to be working so well, and from that moment on he was recognized by the technical community, technical analysis community, and from that moment on all the people jumped into this indicator, trying to see its usefulness. If you are to apply, this is a blank chart, a euro dollar 1 hour chart, and if you are trying to apply the indicator, then you just click insert indicator, trend indicators, and you just choose the commodity channel index. Now you'll be surprised that this is commodity channel index, but it is not going to be a channel just like you've seen on the previous Bollinger Bands video, but it's going to be actually you'll see a range on the downside of your chart. Now the default setting for the commodity channel index setting by the broker is 14, but you can change this setting like on 9 or 10 or whatever you like. This is the color, light sea green. You may set different levels. Normal level setting being set by the brokers are -100 and 100. It doesn't mean that the price travels only up to 100 and lower towards -100, but these are the default settings offered by any broker. This is the style, the color. You may change this as you want, and the visualization, of course, you want it to be seen on all the time frames. And click OK, and this is the commodity channel index. Now, as you can see, it is not a channel to be seen on the chart, exactly on the chart, but it is a channel between 100 and -100, showing you also the zero line, the zero level in here. The normal way to interpret this indicator is to keep in mind first that it is a trending indicator. That is following the price, or the price should be followed by the indicator. Take a look at this. So the indicator, it is actually in here, and look at the price. Okay, then it is started to come down, making almost the same moves, and then started to come up. So basically it seems to resemble the moves that the price make, and attributing a value for each move. For example, you're looking now on the data window that we are having in here. So each candle has a value. Take a look at this candle. This candle has a value of 225.83. The very next one, it is 242.54, and so on and so on. As you can see, by moving the mouse on the next candle, the values for the CCI, the commodity channel index, change from a positive number in here to a negative number, and traveling C81, -164, -100, so well below the 100. So what should you do? Normally you should try to play a little bit with the ranges in here. If you want to add a level, just click right click, then the indicator list, commodity channel index, edit, and then levels, and just, I don't know, to add a level, let's add, if you want, 200. Okay, so you have the 100 level, the 200 level, the 300 level, let's say, then add another level and say -200, so to see the mirroring image, and -300. You may even enter a description for each of your level. I don't know, let's say in here maximum, okay, and in here let's say minimum. You may change the color as you want. Let's say, let's make it green, for example, like this. Now let's make it something more friendly to the eyes. Let's make it red, and may click OK. So it may look like this, for example. So you can actually customize it as long as you want. And seeing here the description levels minimum and maximum, what we've entered. For example, a strategy might be to look for divergences between commodity channel index and the price. For example, in here we have no divergence since the commodity channel index makes a new high and the price also makes a new high. But in here you are full of divergences. Take a look in here. This is a high for the indicator, but then it is being followed by a low by it. So no divergence in here. Also no divergence in here. This is a divergency, so the price, it is moving higher. The indicator actually it is moving lower, but the indicator being a trending indicator, so a divergence between the price and the indicator should signal something. So you might decide, for example, there are people that look for divergences all day long, so you might decide to go short, to take a short position in here based on this divergence. Or, for example, you might decide to initiate a short or a long position when, let's say, price is traveling up or below the zero line. So if you want to highlight the zero line, for example, let's say indicator, commodity channel index, edit, and put it in here the levels, and add the zero level like this. And let's say in here, I don't know, breaking signal or something like this. Okay, and you have here the breaking signal. So you might decide, for example, to initiate a short position when the commodity channel index goes in the negative territory, or a long position when it goes into a positive territory, and so on and so forth. There are a lot of strategies. There are a lot of strategies out there using commodity channel index. What to keep in mind is that this is a trending indicator, and being a trending indicator, actually it is following the price. One of the most common strategies out there for it is the divergence looking. So when you see a divergence, you might want to take it into consideration. Although, from my personal experience, divergences are tricky, meaning you may find that the price stays in a divergence manner more than your account is, let's say, solvent. If you can see in here also, so this is the indicator following price, so no divergence in here, making a new high, and then making in here a new low, the indicator, but the price is making a new high. So this is normally a divergence. If you take a trend line from here, this is a normal trend line like this. So if you take a trend line on here and try to put it on the price, so the price actually is going to the upside like this. And if you take the trend line from here and put it on the oscillator, the price is going to the downside. So this is the classical case of divergence between the price and the indicator. So you might look normally to initiate a short position on such a divergence. But there are cases if you go back in history and try to identify divergences. There are cases when such divergences actually are just a catalyst for a move into the opposite direction. So the price actually to go higher in here and the divergence to be invalidated. But there is a whole theory out there regarding divergences. So I just invite you to look for it. One last thing about the commodity channel index. Sometimes it is being used by market participants as a signal, a strong signal to go long or short when the indicators reaches extreme values. For example, when it comes towards 300, see, this is our minimum with minus 300, just go long. So you might decide to go long on an extreme level, or when it reaches 300 in here, you might decide to go short on such an extreme level in here or in here to go short. So it depends very much on your strategy. Do your own research and keep in mind that this falls in the category of trending indicators. Thank you, and the next recording is going to deal with the moving averages.